going on? What's going on? Welcome back. Welcome back. As always, welcome back to another episode of Take Profit Tuesdays with your host, Yvonne Stewart. And as I always like to say in each and every single video, guys, this video is strictly for educational / entertainment purposes. If you're seeking to, or if you're not able to partake in the environment, financial markets as well, it's very volatile. If you do not master the four pillars of investing, you would definitely have a difficult time doing this. So as a disclaimer, again, this video is not for financial advice. This is for education / entertainment. If you are seeking someone who's a professional, please seek an institutional investor, institutional brokerage, with a money manager. He's the one that you're gonna go to. Make sure you help him with his fees and his commissions as well. You're gonna charge you almost annually, if not quarterly. And yeah, if that's what you want to do, it's pretty safe. A lot of time it's regulated by the SEC, so on and so forth, FNRNA. And yeah, that's something you definitely want to do if that's your playing field. But over here we're gonna teach how to do it independently. We've been doing it for some years now, and we've been profitable. So with that being said, if you're just not coming in, make sure you like the video. You want the channel to grow, make sure you share this with all your friends, family members who are interested in the financial markets. And this is a very opportune time to get in when the market is down, whereas in crypto, forex, stocks, what have you, you could make a lot of money. You could make a good amount of money, and you could have a good savings, so on and so forth. So with that being said, I just want to let you guys know that as the owner of Vanya FX, we do have 3 products and services right now. We have the signal services, we have the one-on-one education where we do it via Zoom, and then we have the crypto account management. So if those are something you might be interested in, you want to learn a little bit more, especially with the one-on-ones, which I enjoy really doing, really educating people, show them how easy it is for the most part if you really put your 4 on the 4 pillars and take it serious. With that being said, a lot of times you'd be like me, just waking up, seeing the news, and market's down, 200 down, whatever amount of points, and it doesn't affect you because you already know I have the 4 pillars. So what this is, either is an opportunity to get in or an opportunity to get out, with both winning perspectives. So it's very important that mentoring with someone who knows a lot, having a team around you, having some motivation, not just within yourself but around you, with people like-minded like yourself. So this is something that I could really see myself doing this for a while. And again, guys, this is not something where you can make quick, easy money. Yes, there is scalp traders. Yes, there is option trades, which is something I'll talk about in a few. Yeah, you could really make money short-term trading, but guess what? It's something that you need 5 million pillars just to battle that, because again, you need serious capital, and you need the risk tolerance just to withstand those losing days. You're not gonna have a winning day every single day. I guarantee it. That's a legal guarantee. You're not gonna have a winning. And I'll say it again. You're not gonna have a winning day every single day scalping. Right? Even options trading, we're probably not gonna have a winning day when we get to that point. You know what I mean? We're probably gonna have a losing week, losing month, so on and so forth. It is what it is. But now, as far as what we're doing now with this, we are growing a trading account. We're trying to get to option trading, right? So what we're doing right now, we're just kind of investing a little money here, there, so on and so forth. Nothing too serious. So if you watch my previous videos, and again, what episode is this? Is what, 25? We've been doing these videos weekly for 25 weeks, fam. So if you don't believe what I'm saying within this video, how at one point in time you're profitable, just not even from an initial buying point, you're even more profitable now. So now, if you're watching this, as you can tell by the title, we're gonna talk about the retracement zone or the fib zone, right? So last week, just to harp on what I was talking about before, the trading account. So again, if you're watching this, if you're getting in the price tags where I'm getting in, times I'm talking about, I might buy this, even times I'm telling you I'm not even gonna buy it, you could get in after the fact, at a better price or a worse price. It doesn't really matter. As long as you're within that range, you know what I'm saying. You don't want to buy it. If I'm saying if I got into a buy, let's say right here, let's see if I can circle it so you guys can see it. If I'm telling you to buy it right there, this price tag, right? And you wait, alright, whatever, man. He's just talking, and you see price going up, and then you get that FOMO, aka fear of missing out. And then you're like, alright, let me get into a buy right here, man. I'll tell you right now, you lost money. You lost money. You're already losing money. Right? So, again, just to emphasize on the point of, the 4 pillars, it's very important that you master. Because, again, if it's something you really want to do long term and withstand and make some money on the side, yeah, man, just be smart about it. It's really easy. So now, the option account we're trying to grow again, guys. As you could tell from my guys who are actually following what's going on with this trading account we're trying to grow, we got into another buy. Right? Talked about it before last week. If you paid attention, we're kind of in the buy zone, right? And you remember the more better buy zone. So yesterday I got to a buy, right in the middle of the buy zone. It had a doji. I'm thinking, okay, maybe it might, come up a little bit, but did what it did before, retrace couple down. So, which is fine. I might get into another buy in the next couple of days, maybe end of the week. I don't know. I do not know. But which kind of harps on what I'm going to talk about today's video. And again, I'm going to try to keep it short. We're going to talk about an article and then, kind of wrap things up. So, the Fibonacci retracement zone, we talked about it last week, right? And I'm not going to draw it over again. Just going to explain it a little bit better in detail. If you saw last week how I drew it, and again, just rewatch the video as many times as you can just to understand the concept, right? And why I did what I did. When you're doing the Fibonacci retracement zone, you're waiting for a rally, basically. Once you have that rally, a lot of times the rally doesn't go all the way to the sky. It has to come back down. Just like how if it falls, it has to come back up. The Fib works in both directions, taking all of that. And as it's going up, it has to come back up, and a lot of times it kind of pulls back a little bit so buyers could get into a better position, like me, or investors, who have more money than me. And when they do that now, it get into a lower price than if they were to buy that top. So as prices, slowing down momentum going up and prices coming down, people are buying it, and it's going to start slowing down that pace coming down and continue that rally going up. That's called a retracement. And the best way to draw it, and I'll draw it for you on the side. So as you can see right here, this first leg, it rallies up, but it doesn't keep going before. And it doesn't pass this point. But guess what? There's a pullback. And if there's a pullback, that's a good opportunity to get into a buy, because you wouldn't want to buy right here as it goes down. Right? Yeah, you could buy it, but guess what? You're missing this whole leg. You're getting half a leg of profit. This guy got into a cheaper position than you did, and made more money than you did off that position. It is what it is. So I just really want to harp on that point and that you guys understand that again. Just explain to account a little bit details. Again, we could talk about more and more details if we get into the one-on-one. That we're still in the buy zone, and it's actually a good thing. Take advantage of it. Like I said, I might go into buy again this week. I do not know. I might, depends how I feel. I have the 4 pills on my back, my hands, my feet, so I could do whatever I want. I have no fear. Again, I already explained to you what we're doing, so there's nothing to really hide. So yeah, man, like I said, I want you guys to really take advantage of these buys that I've been getting in. They're really cheap in my opinion. Let me look at the past. I think I got into one kind of bad buy, and that was probably the first couple. So it was the first one. I mean, yeah, I was buying it as it's coming down, cool. But if I was smart enough and waited, so it probably got to this low. But in my head, okay, I thought it was gonna come back up and retrace. It kind of traced a little bit, but it didn't continue. It is what it is, and it kept on going down. So I've been buying it as it's been going down, which is fine. It's fine. Your dollar cost averaging. That's the strategy. But these two buys, no, these are clean, good buys. Even in my opinion, this is a good buy too, unless it tanks. Probably won't. We had a good solid support zone right here, and it's kind of making its way back up. So it's been recovering. So just to transition to our next topic. 1 second. Shout out to Alexandria Simonova. She titles this article, Stock Market Live Update. Stock falls, Treasury yields jump as investors face hawkish Feds. Talk about the rates. Alright, so she writes, U.S. stocks sank lower on Monday, extending a sell-off that began last week after hawkish comments by Fed Chair Jerome Powell as the central banks gather in Jackson Hole. I guess that's where the next meeting is. I think I'll talk about that next week a little bit more detail. So she kind of talks about the points, about bonds. All right, let's talk about this. So she says the moves comes after Powell reiterated on Friday in Wyoming that the Fed will continue and intervene aggressively to combat inflation, even at the expense of economic growth, guys. Yeah, that? Even at the expense of economic growth. Let me jump into DXY. Let me see how the Feds are doing. Because in my opinion, Jerome will come after me. In my opinion, you're doing a terrible job, man. This was down here. Let me do an arrow, just so I can have a. If I'm incorrect, correct me, please. Anyone in the comments or watching this video, throw it in the comments. No, actually, let me take this off. The last Fed meeting was probably like around right here, right? And what's been DXY been doing since? It's been rallying up. We do not want DXY to continue rallying up. Why? Oh, Lily, why would you want the US dollar to go down? Fam, it's aggressively rising. It's not good, fam. It's not good. So look, and I'll tell you why. And if you guys don't know what inflation looks like, this is the perfect diagram to look at, right? In normal economic times, right? Let's look at before COVID happened, right? Normal economic conditions, right? Boom. Prior to COVID, static. It's moving sideways. I repeat, sideways, static. When things are static, it's normal, it's consistent. You could expect things to go up at certain points, so on. It's kind of predictable, so people are not moving crazy, right? Before COVID. Now look at this, post COVID, right? Gas was cheap, stimulus, boom, this, that, and the third. Dollar was dropping. The Fed, a lot of things were going on, guys. A lot of things are going on. It is what it is. And now, excuse me if I could get this correct. Now, if you look at times after 2020, stimulus money was coming out, a little bit of static. Now we have, the PPPs coming out, these down the third coming out. All these Fed government just pushing the money because again the dollar dropped, people are losing confidence, this and the third. And look what happened. A huge rally. That's a huge rally. This is inflation, guys. This is what happens when the price of goods and souls are way too, increases so fast within a time frame, and people are not able to to even pick up with these times. It's ridiculous. And you mean to tell me that the feds have been increasing rates and it's combating inflation? Oh wait. But anyways, continue. The move comes after the Fed reiterated, combat inflation, even expensive economic growth. The Dow plunged down amount of points, following the marks of the S&P, so on and so forth, after the speech. Right, cool. Right, so next we have Chair Powell's speech was good, reminding that 2-year Treasury yields are more important to equity markets than the OFTC moves by the basis points in the upcoming meeting, which we kind of already know it's gonna happen. We don't know. I doubt it's gonna we'll see. If it's gonna drop the dollar to normal range. If anything, this has to be static around the top, and that'd be good. And it has to stay static, or stay kind of like statically goes, slowly going down. You have to see, man. We have to see what's going on. All right, so we'll just wrap it up after this. Kind of going a little bit too long. The most significant risk to stock is weakness in earnings. According to Morgan Stanley, Mike Wilson, who indicated that while the first half of the year was dictated by the Federal Reserve policy and tighter financial conditions, and the second half will be determined by earnings expected for next year. Yeah, people are always they're always planning for next year. So if earnings are not keeping up with these expectations, it's not really looking good for those companies as well. As a result, equity investors should be laser focused on that risk. Not that the Fed particularly as we enter the seasonally weakest time of the year for earnings revision and inflation for these down margins and demands. So yeah, we'll see. Certain things pick up. A lot of things are seasonal nowadays. As well as Wells Fargo head of global assets allocation strategy Terrence McMillan asserted a similar view in an interview with Yahoo. What we heard today was that growth is too strong. Yeah, which I just showed you guys. That what that means for earnings, that we're likely to have to some cuts in Q3 and 4 earning expectations. Yeah, we'll see. Alright, so I just want to wrap things up here because, you guys are great. For those who are watching this live, shout outs to you. For those who are watching this on the replay, shout outs to you as well. Make sure y'all like this video, comment, make sure y'all share it. We're spreading education. We are growing the business, and I want you guys to, be a part of this as well. So, yeah, if you guys are gonna, if you like the content, make sure you like, subscribe, and share it. Other than that, I'll catch you guys next week. Hopefully we can turn another buy position. If not, it is what it is. You know what I'm saying? We're in this. We're in it to win it, guys. We're in it to win it. We're not rushing anything. We're taking our time. We're easy. We're doing other things in life than just focus on the markets. That's what we're doing this weekly. And yeah, I'll catch you guys next week. Peace.